Welcome to the Daily Block, the top events happening in the past day in crypto and why they matter. Fast, loud, and slightly unhinged. Let's go. Bitcoin and Ethereum options expiry. About $4.3 billion of contracts just evaporated. Today's monthly options expiry dumped roughly $3.42 billion notional in BTC and $0.85 billion in ETH into the market across Deribit and CME. Put call skew was elevated, more puts than calls, and Max Payne printed near $113,000 for BTC and $4.4 thousand for ETH, but weirdly the market stayed chilled and implied volatility didn't explode. That calm could be a trap. The real action is in leftover short gamma exposure and any block trades that didn't clear. Why it matters for crypto investing: large expiries can sprint prices into pins, squeezes, or fast liquidations if dealers get short gamma. Watch short gamma metrics and where block trades settle for trade setups. Risk/counterpoint: if dealers hedged cleanly and flows were absorbed, expiry might pass without fireworks. Don't assume chaos just because a big number existed. Okay, quick palate cleanser, onto the next macro whale move. BlackRock reallocates, sells ETH, buys BTC. Big swings in the ETF era. On-chain sleuths say BlackRock trimmed about 115,950 ETH, $913 million, while adding roughly 3,930 BTC, $2.09 billion, in 1 week, pushing the fund's crypto stash back above $100 billion. Translation: a major allocator is tilting from Ethereum to Bitcoin right now, not subtle window shopping. That kind of directional reallocation creates real liquidity flow and can bias basis and ETF inflows toward BTC. Why it matters for crypto investing: institutional swaps from ETH to BTC can tighten Bitcoin basis and drain liquidity from ETH. Position sizing and timing matter if you're riding ETF-driven flows. Risk/counterpoint: one fund's reweighting isn't the whole market. ETH might rebound if staking yields or catalysts reappear, and other institutions could move opposite to capture alpha. Moving on, Solana just got a very large bank account. Forward Industries raises $1.65 billion to build a massive Solana treasury. Institutions buying Sol en masse. A $1.65 billion pipe led by Galaxy, Jump Crypto, and Multicoin is positioning Forward Industries as a huge Sol treasury. On-chain data shows millions of Sol leaving exchanges into custody. Galaxy-driven flows alone around 2.3 million Sol, and staking plans that remove supply from circulation. Heavy, concentrated institutional buys plus staking equals less free float and potentially turbocharged price moves. Why it matters for crypto investing: reduced sell-side liquidity and concentrated demand can push Sol into price discovery quickly and spike funding rates. Great for momentum plays, dangerous if liquidity drier than you thought. Risk/counterpoint: concentration is a two-way sword. If a few institutions unwind or hit risk limits, Sol could gap down fast thanks to low liquidity. Breathe in optimism: Glassnode founders are apparently betting the farm. Glassnode founders say BTC, ETH and Sol could set new all-time highs in 3 to 4 weeks. Glassnode's public take says they have high conviction that Bitcoin, Ethereum, and Solana might punch through to new ATHs within the next 3 to 4 weeks, citing macro tailwinds and on-chain indicators. It's a bullish cast of the runes, not a guarantee, but a high-profile nod to upside momentum. Crowd psychology responds to statements like this: conviction begets crowded positioning. Why it matters for crypto investing: if consensus shifts bullish, expect levered longs, tighter volatility, and crowded trades. Good for momentum but raises systemic liquidation risk. Risk/counterpoint: public bull calls can become self-fulfilling pumps that end badly when liquidity thins. Use size discipline and don't bet the farm on optimism alone. Regulatory soap opera: Coinbase sues to dig up Gensler-era text messages. Coinbase filed to force the SEC to produce internal records after an inspector general probe found a factory reset wiped Gary Gensler's texts from October 2022 to September 2023. Coinbase wants expedited discovery and possible sanctions. It's the courtroom equivalent of show me the receipts. Any legal fallout could reshape the narrative on SEC enforcement and market risk pricing. Why it matters for crypto investing: regulatory transparency is a macro volatility lever. Big rulings or revelations can move cross-market liquidity and retail sentiment in minutes. Risk/counterpoint: legal processes are slow and messy. While headlines trade, the actual legal outcome might take months and markets can price in the noise early. Dogecoin whale move and ETF whispers: Clean Core buys 500 million Doge. Clean Core dropped about 500 million Doge, $125 million, into the market and Doge jumped roughly 20% on the move. Meanwhile, traders are pricing in a likely US Dogecoin ETF ticker DOE, and that ETF narrative is fueling speculative allocation. When whales plus potential ETF access collide, meme coins forget subtlety and start sprinting. Why it matters for crypto investing: whale accumulation plus the ETF narrative is textbook fuel for quick momentum trades. Higher correlation across meme coins, and volatile funding rates, ideal for swing traders with a death wish and tight stops. Risk/counterpoint: meme plays can reverse violently. Institutional demand talk doesn't lock in retail behavior, and ETFs can disappoint relative to hype. Microcap and presale noise. Remitix raises $25.2 million. Wallet beta days away. 15% USDT referral. Remitix completed a $25.2 million presale. Confirmed Bitmart and Bank listings. And teased a beta wallet launch within days alongside a 15% USDT referral program paying daily. That's the classic presale playbook. Product announcement plus listing plus referral liquidity loop. Listing volatility could be big and the referral program might turbo short-term demand. Why it matters for crypto investing. Product stage presales with exchange listings tend to spike on listing day. Fast liquidity, fast exits. So size down and plan an exit. Risk/counterpoint. Presales and referral payouts can mask poor fundamentals. Audit and tokenomic checks are mandatory because manuals do not stop rug pulls. Meme reboot. Lil Pepe presale and whales rotating from SHIB to Lil Pepe. Whales from the 2021 SHIB pump are reportedly redeploying into Lil Pepe. The Lil Pepe presale cleared over $24 million with stages selling out and promised CertiK audits. Meme whales rotating capital is exactly how parabolic pumps get born, then sometimes vaporized. Why it matters for crypto investing. Whale rotations between meme tokens can deliver quick, parabolic pops, perfect for high-risk flips if you're nimble and strict with size. Risk/counterpoint. Memes are the highest beta and lowest predictability trades. Audits and presales don't stop dumps or coordinated exit strategies, so limit exposure and use immediate stop-loss rules. Alright, that was your rapid-fire news feed. Now, short trader takeaways so you don't get wrecked. Near-term volatility is most likely driven by options expiry flow and large institutional reallocations like BlackRock and Forward. Watch Gamma and Basis. Monitor Sol and Doge liquidity and funding rates. Institutional buys and ETF rumors can make those funding rates spike and liquidations follow. Presales and meme rotations. Remitix, Lil Pepe, clean poor dogs, are high beta scalps. Great for quick returns, terrible for sleep, size them tiny. Regulatory headlines like Coinbase versus SEC can trigger cross-market moves, reduce leverage around big legal releases and use hard stops. If you want, I can track live funding and futures basis for BTC/ETH/Sol and flag abnormal moves, pull option skew and force surfaces for the next 48 hours to trade straddles/strangles/gamma scalps, or build a watch list of presales with tokenomics red flags. Say the word and I'll start the bleed. If you like this chaos digest, hit subscribe and ring the bell so we can scream together next time. That's today in crypto, where the gains are imaginary and the pain is real.